Hey puppy trades! In this video we're going to be going over a portfolio that is only Yieldmax ETFs, and we're going to use 50% YQQQ and 50% the semiconductor covered call ETF CHPY. So CHPY is going to actually own the best semiconductor stocks. This portfolio yields 39% and is fully hedged with a 7.84% return from April 3rd to May 29th. Warning, this video is not investment advice and I'm not a certified financial advisor. So CHPY is the Yieldmax Semiconductor Portfolio Option Income ETF. CHPY is an actively managed ETF launched on April 2nd, 2025. It invests in a portfolio of 15 to 30 U.S. listed semiconductor companies and seeks to generate income by writing options on these holdings. The fund aims to distribute income on a weekly basis. Key details: an expense ratio of 0.99, that's the biggest con. The top holdings are Broadcom, Nvidia, Qualcomm, KLAC, Lam Research, and Taiwan Semiconductors. YQQQ is the Yieldmax short NASDAQ 100 option income strategy ETF. YQQQ is an actively managed ETF launched on August 14th, 2024. It employs a synthetic covered put strategy to provide indirect short exposure to the NASDAQ 100 index, aiming to generate monthly income. The expense ratio again is 0.99. It primarily holds U.S. Treasury securities used as collateral for the fund's option strategy. Strategy overview: YQQQ seeks to profit from declines in the NASDAQ 100 index by selling put options and holding short positions while using U.S. Treasuries as collateral. The fund's potential gains are capped, and it may incur significant losses if the index rises sharply. That's what CHPY is for. So the yields: CHPY yields 40%, YQQQ yields 37.74% combined. They yield 39% together. CHPY has a 17.63% total return since inception, so that can be paired with YQQQ, which only lost 9.79% in the same time period. Conclusion: 50% CHPY and 50% YQQQ create a long short portfolio where semiconductors are longed and the NASDAQ is shorted. The combined return was 7.84% from April 3rd to May 29th. The total portfolio yield was 39%, and half of it pays weekly dividends. 60% CHPY and 40% YQQQ would be more biased towards growth. The cons are the 0.99% expense ratio.